It's the last edition in the week. Good morning and welcome to Business Morning. Thank you for joining us. I'm Chimeze Obi Iwag. We'll begin from global oil market as prices continued to recover from a drop to 6-week lows as investors wondered about how much crude major economies would release from the strategic reserves and how much that would ease global crude demand pressures. Prices fell to the 6-week lows as China said it was moving to tap reserves. Reports say the United States was asking large consuming nations to consider a stockpile release to lower prices. Washington's bid to cool markets, asking China to join a coordinated action for the first time, comes as high gasoline prices and other inflationary pressures have sparked a political backlash. In early trade today, U.S. crude was up 0.6% to around $79.05 per barrel. Global benchmark Brent crude rose 0.82% to $81.91. The International Energy Agency and OPEC have said more supply will be available in coming months, but Washington has pressed for a speedier pace. The proposed release of reserves represents an unprecedented challenge to OPEC because it involves a top importer, China. And back here, the federal government is looking at increasing funding for statistical development through the establishment of the Nigerian Statistical Trust Fund and the full implementation of the National Strategy for the Development of Statistics. Speaking at an event to mark the 2021 African Statistics Day in Abuja, the Minister of State for Budget and National Planning, Mr. Clem Agba, explains that the plan has become imperative following the role that access to statistical data plays in national development.
Data is the lifeblood of fact-based policy decision-making and the raw material for accountability. Without high-quality data providing the right information on the right things at the right time, designing, monitoring, and effectively evaluating policy implementation outcomes becomes almost impossible. The key objectives and targets are regular funding for NBS and the National Statistical System, increased coordination and harmonization of data across all levels, and capacity building and development within the National Statistical System. The strategies are the establishment of the Nigerian Statistical Trust Fund and the full implementation of the National Strategy for the Development of Statistics. In addition to the above structural enhancement, the federal government is determined to entrench a system that will eliminate the practice of falsifying information for self-interest, as well as doing things without recourse to facts and figures. You are all witnesses to the fact that this type of attitudes have no doubt retarded our development efforts in the past by making it difficult to determine where to provide essential services and in what quantity.
We'll talk more about that in the course of this program. In the meantime, 4.03%, that's the rate that Nigeria's economy grew year on year in real GDP terms within the third quarter of this year. The latest economic data, which was released yesterday by the National Bureau of Statistics, reflects a sustained positive growth rate over the last 4 quarters since the recession witnessed in 2020. However, the latest GDP growth was lower by 0.98% points than 5.01% recorded in the second quarter of this year. Meanwhile, the NBS economic report indicates that the oil sector contributed 7.49%, while the non-oil sector contributed 92.51% to the nation's total real GDP growth within the third quarter. Still on growth, human capital development is one of the pillars on which the federal government is anchoring its new 5-year national development plan. It has become pertinent to showcase the role of the people as the key drivers of economies in the nations around the world. And as Nigeria struggles to grow its economy, cause for worry and concern when the critical role of human resources is being relegated to the background. How can these be dealt with? Financial and management consultant and the CEO of Flame Academy and consultant, Mr. Oju Demizwe, will join me in a moment. Keep it here with us. This is Business Morning. In the world of diplomacy and international relations, unsaid conversations are just as important as what is said.
Donald Trump believes that as a president, he has all the powers.
How it's said.
International community will normally frown at any violation of human rights.
To whom it said.
There are people who have left their countries because the system has left them with no other option.
And the reactions.
We are going to face a massive ecological and humanitarian crisis.
Keep up with in-depth analysis on the what, how, and why on Diplomatic Channel, weekdays at these times.
With subdued world economic outlook, coupled with trade tension and climate change, Africa is not insulated in all these, as globalization brings about interconnectivity of the world economy. On Business Incorporated, we answer those mind-boggling questions and dissect the issues as it affects you. That's not all. We also follow the numbers and what informs investor decisions in the global financial market. Every weekday at this time.
All right, I'm being joined by Mr. Orji Udemezue, the CEO of Flame Academy and Consulting. Good morning, Mr. Udemezue. Thank you for joining us on the program this morning.
Good morning, Chimeze. It's always my pleasure to be on your platform, Channel TV, the best TV station in Nigeria. Well done.
You're welcome. All right, now the third quarter GDP numbers released yesterday by the National Bureau of Statistics indicates that Nigeria's economic growth rate is still crawling. So where is the place of human capital development when we talk about GDP growth rate?
All right, Chimeze, you know, when you talk about GDP growth rate, it's about economic productivity, the value, final value of goods and services. Oh, can you hear me, Chimeze?
I can hear you.
Can you hear me?
I can hear you, Mr. Orji, clearly.
It's about the value of goods and services produced within the boundaries of an economy over a period of time. And human beings are the ones who who run these activities. Whether you're talking about oil and gas sector, agricultural sector, financial services, hospitality and all of that, medical services, human beings drive these activities. And when they are driving these activities at a very suboptimal level with low preparation, low skills development, low education, poor quality morale or low motivation and all of that, you find that you can barely grow. In this fourth industrial revolution, economies around the world are driven mainly by human capital. If your people are not ready to capture opportunities, driven mainly by big data, Internet of Things, digital transformation and all of that, and you're putting your curriculum to play up to that, you find that you cannot grow. Entrepreneurship is a special input factor in every economy. When you talk about factor of production, entrepreneurship is the organizing factor of land, capital, labor, and so on. So when you have a country where people do not have entrepreneurial skills or they don't have proper education that can produce results, whether in services production or goods production, that economy can only crawl. It cannot grow to full capacity.
Right. Now, the federal government's national development plan was structured along 5 clusters, and human capital development is one of them, with an investment size of about 348.7 trillion naira. What do you hope to see, in the area of human capital and looking at this chunk of money being channeled to this new development plan? I mean, we keep coming up with so many plans.
Talking about 300-something trillion, that's a very funny figure because I don't think Nigeria has the capacity to generate that amount of money even in the next 100 years. We're talking about an economy whose actual revenue today is largely less than 5 trillion per annum. So even when you want to borrow, you cannot borrow yourself to debt. So that could be a plan. It's just a way of stating that we have a very huge gap in that sector, educational sector and the health sector. So we have good intentions, but how serious are we about, actualizing these intentions? If you look at government budget in the past years, the allocation to educational sector, it is still far, far, far below UNESCO standard of about 20 to 26% of budget being given to education. Nigeria has wobbled between 5% to 10%. Even now, the current president is making effort, as he promised in a conference last year, in the UK. He promised that he will ramp up a budget allocation to the education sector to UNESCO standard. But we are still seeing something far below that. In the 2022 budget, about 1.1 trillion is being allocated to education sector. But a huge part of that is for recurrent expenditure. We are not spending strategically to ensure that we have proper infrastructure in our universities, educational centers, skill acquisition centers, and entrepreneurship development centers in this country. And we're not seeing even any seriousness in our public schools, where you see a professor today earning less than $500,000 in about $1,000, when their colleagues around the world are earning 10 times that. So we're not yet serious about channeling more funds to human capital development. We are still playing, words of, semantics around it. And that's very sad. If you want your people to develop, you must spend in providing digital access, quality education, a strong handshake between the town and the gown, the universities and the industrial segment. No research work is being done today by professors in our universities to support the industrial sector. So there's a big gap between the graduates that we turn out and then the actual skills needed to produce good results in today's technology-driven economy around the world.
And taking it from what you're saying, I mean, this week we're seeing ASU also threatening to go back on another industrial strike. I mean, how does that come across to you after what was experienced last year?
It tells you how most unserious we are. This government has never kept their promises to ASU. They keep playing tom-tom, tumbon with our educational sector. It's very, very sad. This government is spending heavy on very unimportant things and then joking with, very serious matters. No government anywhere in the world, you can quote me and write it down, no government that jokes with its human capital sector, the education sector, and at the same time, hope to achieve any reasonable, sustainable, inclusive growth in that economy. Education, by the way, is the only instrument you can use to eradicate poverty, in one generation. Show me any poor family, extremely poor family today, and train one child there, get the child educated properly. Let me tell you, in the next 25 years, that family's fortune will change totally. Nigeria, unfortunately, today is still the poverty capital of the world, where we are churning out more than 100 million extremely poor people in a population of 200 million or thereabouts. China and India, that have far above that, about 1.6 billion population, have much less, extremely poor people than us. And the only way out of it is not the semantics, the game of war that we play about this sector. It's about channeling enough funds to research our universities, equip our libraries, equip our laboratories, pay our lecturers very well, and build infrastructure around the schools, games and so on. And then, very importantly, in every university and every local government in this country, we have a very well-run, private sector-driven skills acquisition center, and particularly ICT promotion, and of course, the popular STEM education. We must get serious with this. We must cut down the size of our government, where we pay billions to National Assembly, where we spend billions in campaigns, where we now dole out money to buy votes and so on. We have a huge security vote and all kinds of lifestyle expenses. Even when we borrow billions, like we are proposing to borrow $16 billion now, most of that borrowing is going to very non-productive expenditure. That's very sad for this nation that should be the giant of Africa.
Right. Now, the World Bank last report on human capital development highlighted how current health and education outcomes shape the productivity of the next generation of workers and underscores the importance of government and societal investment in human capital, and just as you did mention. So, but how can the private sector, contribute to education and health as a sustainable development priority in Nigeria? I mean, I know that for these sectors, education, especially the private sector, is really playing so much role there. But then we find out that most of these private schools are even very, very expensive.
And that's the point there. When you want to drive inclusive and sustainable economic growth and development, you must find a way to make literacy a common parameter in the country. You must find a way to enable people to have access to quality education without breaking the banks. If we all go to the US to study, you find that you break the bank, you pay millions to go and study there, but US citizens pay next to nothing. So how can we make our education sector attractive to bring in foreign investment at the same time? That's actually where we need the most of subsidy we should be having in this economy. But many poor families cannot even feed. People are earning below 40,000 in a month with master's degree, degree. And you find that a family with 4 children, how can they send their children to university? Even though our federal university, let me still say it, commend the government so far on that, the school fees there is still very paltry and cheap, so to speak. But then, what's the quality of education they're getting at that? So I think the private sector must be called in a way that will be very, cost-effective for the students. Chimele, can you hear me?
I can hear you perfectly well.
Okay,
I can hear you
fantastic.
perfectly
So,
well.
we already have a reasonable amount of private sector investment in that sector, but a lot more needs to be done, not just in the university system or secondary school system, but also in the health sector. So human capital covers education and health and recreation, even hospitality and all of that. So government needs to create a proper legal and regulatory framework to encourage private sector people to play in that segment and bring in more players there, so that when we have more players, more like a monopolistic competition or even a perfect competition, you can have the buyers, having a better pricing system in that sector. Time was when people were coming from everywhere around the world, from India, from China, from US, from Ghana, around Africa, to study in Nigerian universities, University of Ibadan, UNN, and all of that. Today, Nigerians are seeking every opportunity to study even in Benin Republic, in Ghana, and so on. So that's a very bad reversal of investment trend. We need to bring in quality investment where government gives a very encouraging level playing ground for people to invest in our educational sector and even in the health sector. Why should we be going to US to go and do organ transplant and all of that, or to Germany or India or China and so on? Why can't we encourage great private sector investment in our health sector, in the educational sector, in skills acquisition center, so that we will have enough to train our people? Nigerians do so well everywhere else in the world. Nigerians are the top medical directors we see in the US and around the world, even in UK. Nigeria's human capital is powerful everywhere else in the world, except in the boundaries called Nigeria. Something must be done strategically to drive human capital in this country and value our teachers, whether at the primary school level, secondary school level, university level. They must be paid well and motivated to bring up quality human capital for this economy to grow. That's my take.
All right, Mr. Udemezue, a quick one before I let you go. So what policy choices would you advocate to actually, deal with this, and not just all about talk, but actions?
Yes, as usual for me, I don't like just criticizing or commenting. I like to give solutions. One, this government must calm down their high horses and engage our university managers effectively. For federal universities, I'm speaking about it because if we make the federal university system expand more and become effective, we'll have cheaper education to this country. One, they must take the lecturers seriously, engage them, and keep your promises to them. Pay them better. A professor in this country cannot be earning less than #1 million, just to say the least. So when you pay them well, then you ensure that their payment system is automated. The IPPIS system must be implemented in the educational sector, even if the lecturers don't want it. You have to pay them well, then insist that the payment is done, well-integrated payment system. That's one. Then government must cut down the size of government. We spend so much in recurrent expenditure in this country, and so much of that is wastage. We have several government agencies that are duplicating their functions and so on, and many are redundant. Let's shut them down. Let's shut down the size of our legislature and so on, and channel more funds, because we don't have enough revenue yet. Channel more funds towards the education sector. And and then again, let us encourage private sector, engagement, PPP level, licensed more universities that are very well set up, and then very importantly, partner with their consultants like us, training and capacity development institutions to develop, entrepreneurship centers around every local government and make it available for people to come and learn how to grow snails, learn how to export, agricultural produce, learn how to use digital technology to run their businesses, learn how to do all IT things. That is what we must begin to look at right now in our government policies. That's practical enough, I think.
Always a pleasure to have you on the program, Mr. Udemezue.
The pleasure is all mine. Thank you very much, Chimezia.
Thank you. After the break, we look at the importance of data to national planning and development. Do stay with us. Every 18th day of November, is being set aside for Africa Statistics Day. This is an annual event to raise public awareness on the importance of statistics in all aspects of social and economic life. This year's theme is modernizing national statistical systems to support socio-cultural development in Africa. Well, Nigeria joined its other African counterparts to mark this event yesterday, and it brings to light the importance of data in economic development. To have this conversation with me is a professor of statistics at the University of Port Harcourt and a fellow of the Nigerian Statistical Association, Professor Ethelbert Nduka. Thank you very much, Professor Nduka, for joining us on the program. Good morning.
Good morning and welcome.
Thank you. Let's understand first the significance of African Statistics Day celebration.
The African Statistics Day celebration is an opportunity for us to appraise our activities and the appreciation of statistical information in the continent of Africa. How important statistics is in the development and economic planning and policy formulation and right decision making in the continent of Africa.
Okay, now some commentators have said that we are planning without facts. Would you agree with this view?
Well, we are planning with facts, but very deficient facts, because we are not planning in empty air. But how reliable is our data system? Who are the ones collecting this data? Who are the ones analyzing them? Who are the ones pushing them to government or policymakers? Are they making use of the statistical information made available to them at all levels of government? So these are the issues. Not that the data are not there, but one,
now that brings me, you talked about how reliable, you know, these
yes.
Data. That brings me to my next question: the quality of our data, the integrity of our data. Let's take, for instance, I mean, here in Nigeria, we've been having our inflation data out for some time. We've been seeing the inflation data tapering down. We're seeing inflation is coming down, even though globally inflation is rising. But then when we get into the market, it doesn't even reflect, you know, what the data is saying and the reality out there. And then that leaves to question the integrity of our data. What's your thought?
Well, you may have a point there, but remember too that what we are dealing with is aggregate data. For instance, food inflation may be high, but other components of the inflationary trend may not be as high as that of food inflation. So it will appear as if you said that the inflation rate is manageable, so to speak, but the food inflation is skyrocketed. So that doesn't really diminish the quality of the data, but the components of that data system.
Now, what's your assessment of the performance of the National Bureau of Statistics in the provision of timely and accurate data?
Well, I think the National Bureau of Statistics is doing its best in gathering data for national planning. But how easily accessible are these data systems? How disposed are people to give the right information for better planning? So these are issues. How readily available are these data for collection and for analysis, and then for quality decision making? So that is why statisticians must be involved at all levels. It's not just going to analyze data that have been wrongly collected or that are deficient or even dysfunctional, because it is what is made available to you most often that you deal with. After screening, of course, to the best of your ability, you have to screen the data, clean it up before you now get it analyzed and push it to the society. If you know the background of what the statisticians do in handling data, you will appreciate that they are doing their best. But we must improve the quality of the data at all levels, not just because if any chain is weak, It affects the entire outcome.
Okay. So
if your data is deficient, no matter how sophisticated the analysis is, you are going to get biased results.
yeah. So tell me now, what are the challenges of data gathering in Nigeria? What are the major data gaps?
Well, the poor record keeping is a bane of our society. Poor record keeping. We hardly keep data, and then we mask information. There are certain information that the policymakers feel that will embarrass them. And then, but the facts are there. You want to bring up these facts, they will dispute those facts and run with the ones that seem to suit their fancies. So this is a challenge. If, for instance, you give a true picture of a crime rate, I'm just giving you an example. Some governments may frown at it, or you give information on those facts were there.
Okay, Professor, if you can hear me here, the MBS had complained of poor funding over the years. Is this a reflection of how much importance is attached to data gathering in Nigeria?
Yes, data gathering is the bedrock for quality analysis and quality formulation and decision making. So once the data is deficient, there is little even the statistician or the MGS can do. And that is why we've been preaching that all activities that are data-driven should attract the attention and the engagement of statisticians so that you have the people who are the practitioners manning this data system instead of making it an all-commerce thing. And that is why government is urged to enact necessary laws to professionalize statistics so that those who are saddled with it can do their work qualitatively and in a professional manner.
Yeah, Professor, apparently you didn't get my question there. I'm talking about the place of funding in data gathering because oftentimes the National Bureau of Statistics have complained of poor funding over the years.
Yeah, it's a general problem, funding level, because, for instance, surveys are things that you must do continually. So when you complain of funds, people may resort to using stale data that may not even bring out the facts and the issues that are currently involved. So in that case, funding hampers the quality of data gathering. There's no doubt about that at all.
Now, how can we leverage technology to improve our data gathering and data quality? Well, I think we've lost Professor there. Anyway, while we try to get connected now to Professor, let's see what's happening at the market. We have Anita Edit there. Anita, what's up with your market?
Well, good morning, Jimmy. I think I'll start first with the fixed income market, where it was much of a bullish sentiment. That market had been relatively quiet and not much of activity. But lo and behold, after the Debt Management Office offered 150 billion naira worth of bonds, then, of course, that sent investors scrambling for, much of the debt instruments. And then, of course, we had much demand across both the fixed income market, across the bonds market and the treasury bills market.
Well, should hold your thoughts there. Let me get back to Professor to round up his thoughts there. Professor, thank you for staying back there. Sometimes when we're talking about technology, actually leveraging technology to improve our data, and look at it, disappointing us right away. Anyway, can you wrap up? What do you expect to see going forward both from the government and even the private sector?
With the increasing awareness and what we now call data revolution, I think the government may not have any choice than to encourage the use of technology and also training and retraining of staff in the system to also be abreast with modern trends in data gathering for a healthy economic and policy formulation.
Thank you very much, Professor Nduka. We do appreciate your time on the program this morning with us. Enjoy the rest of the day.
Thank you. Thank you all.
Okay, Aniete, you were talking about the market. It was the bears again yesterday, and of course you were trying to talk about the happenings at the fixed income market.
Yeah, Timmy, if you know me, I guess I'm someone who is always on the positive side. And I think that's why I want to start first with the fixed income market, which was mostly positive by all standards. But I'll come to that equities market which you talked about. But first, let's take our attention to the fixed income market. Bonds market, bullish activity. Of course, like I mentioned before, that the Debt Management Office had offered 150 billion naira worth of debt instruments, the bonds, particular for the month of November. And then, of course, it was oversubscribed by more than 50%. Which had about 255 billion worth of bonds being, sold by the DMO on Wednesday, and of course that had an effect in Thursday's markets. Take a look at it. Number of deals there, 19, and then much of the attention was on the 27th of March 2050. Of course, market participants had made much demand for the 2036 bond, and then of course. Let's flip over to the Treasury bills market. Much of the interest was on the 252-day date-to-month bills. Of course, that was particularly on the 13th of October 2022. Number of deals there, 20, value 20.50 billion naira. Then, of course, moving over to the open market operations, the 7th of June 2022 paper, that had the only interest there, one deal worth 1 billion naira. And then, of course, moving over to the CBN's special bills, we had two instruments there, 13th of December 2022 and the 29th of November, which, of course, 8 days coming, well, not too far away. Two deals there, valued at 3.5 billion naira. So, of course, we had much of a rebound on the fixed income market. But I think we should be having our analyst, the Deputy Managing Director of AfriInvest Securities, Adedoyin Araolua, to tell us more about the fixed income market. But I think we do not have her right now. So let me just move over to the equities market. Yesterday, this is the color it printed out at the close of Thursday's trading session, all right across board, and that's because the likes of GTCO, First FBN Holdings, Nigerian Exchange Group, of course, which that's where all the stocks are traded, as well as Union Bank. Basically, the banks had much impact, which led to 33 billion loss on the equities cap, but still very much in the 22 trillion level, while the all-share index is still around the 43,000 points. Now, of course, also the sectoral performance was mixed, red, but I think we can go back to the fixed income market and have a talk, Adedoyin Araolua, the Deputy Managing Director of AfriInvest Securities, to tell us what happened at the fixed income market in Thursday's trading session. Thank you for joining us, Araolua, Ms. Araolua.
Good morning. Thanks for having me.
Okay, so I'm sure traders there are, at the fixed income markets, you are kind of relieved that that market is trying to regain some vibrancy in contrast to recent days where there was lackluster performance. Can you bring us up to speed with what's happening there and the outlook for next week?
Okay, thanks. On the bond market, there was primary market auction last week. The demand was weak on the January 2026 and April 2037 offer compared to previous auctions because of expectations of other bond auctions like the Sukuk bond and Lagos State bond, which investors are expecting will have higher yields than the FGN bonds. The 2050 bond was slightly oversubscribed because investors are trying to lock in funds for a longer period. And it's also worthy to know that it's the last auction for the year. On the Treasury bills market, we saw Omo auction in the market yesterday, and the market was particularly quiet during the day. due to the OMO auction, participants in the NCB space demonstrated continued interest on the long end of the curve, most notably the September and October papers. The CBN offered and sold 25 billion naira across board in the OMO market, and it was met with a subscription level of 3.8 times the amount offered, leaving rates unchanged at 0.7%, 8.5%, and 10.1% on short, mid, and long end of the curve, respectively. The outlook for the week on the bond market, we've been seeing improved offers across the curve as local investors attempt to take profits on their auction winnings. We expect this bearish session to continue next week. However, on a quiet note, as there are no inflow expectations into the market next week. On the Treasury bills end as well, we're expecting liquidity of 118 billion from NCB's maturity, which will filter back into the market. That's the outlook for next week.
Okay, so I think we'll keep all of our attention and then put our money where our mouth is. But before I let you go, do you think the fixed income market still has an upper edge against the equities market? Because these two markets they go side by side, especially as far as inflation concerns. And then next week we will be having the Monetary Policy Committee of the Central Bank meeting, the final one for 2021. So what do you think investors will continue to focus on the fixed income markets, or will it draw back?
Well, it's going to be a mixed reaction. Yes, we're seeing focus on the fixed income market. We even have commercial papers, the bonds and treasury bills, like we've analyzed this, we're seeing traction in that. The equities market as well, we're still seeing positive movement. We're expecting results. Investors are positioning for dividends, are also still interested in the equities market. So it's going to be a mix of the two. It's going to be balanced across both markets.
Okay, thank you so much, Aralua, and then enjoy the rest of the week into the weekend. Okay, so Jimmy, I was talking about the sectoral performance there. Banking sector, industrial goods, as well as the oil and gas sector, they took the toll on the market and countered the gains that you had from, their consumer goods and insurance sector components. So, of course, that's what made the market to go into the red. But, of course, volume, value, deals, all in the red. So red was the color for Thursday. Now, if you look at the smaller unlisted securities market, it made a rebound, more than 0.5% rebound. And the NSD's index at 746.83 points, while its market cap is just around the 617 billion naira threshold, while the volume and value of deals, well, still, I wouldn't say it's that impressive, but of course it is a smaller market. So I think for now, we just wrap up the market and then look out for how Friday's trading session will end, whether it will go to the side of the bears or the side of the bull. But your guess is as good as mine.
Well, let's just hope that the bull take the upper hand.
Of course, that's always the optimism.
In the green.
Yes.
Thank you, Anita. We take another break, and when we come back, we do a crossover to London. And for some development in London, we have Juliana. Good morning, Juliana. Well, I would say, thank God it's Friday. In any case, should I say, is it a case of no more tea from Unilever as the company sells its tea business to European private equity firm?
Yeah, that's the case, Chimezie. The world's biggest tea maker, known for some really popular tea fancies like PG Tips and Lipton. They've sold their tea business. It's actually called Ecatera, and it's based in Rotterdam. They've sold it to CVC Capital Partners for 4.5 billion euros. Some analysts suggest that it could have been a bit more, but considering that the business had suffered losses over the past couple of years, it's pretty much seen as a good deal. We know that most younger people these days, Chimmy, don't really drink tea anymore. They're drinking fancy coffees and other alternatives. So Unilever have tried to get rid of the division for a couple of years now. There was a bidding war. There were other private equity groups across the world that wanted to get their hands on the brand. CVC Partners Capital was successful. What they get with that 4.5 billion euros is over 750,000 farms across Africa and Asia. This has 20,000 employees, but it doesn't come without controversy. Unilever have been caught up in various controversies over the past couple of years, but particularly when it comes to farming. I believe in 2017, Kenyan farm workers put a serious complaint to the United Nations saying that their working conditions did breach human rights. There is an ongoing investigation with regards to that, but subject to regulatory approval, this 4.5 billion euro deal will be signed, sealed and delivered by the second half of next year.
Right. In the meantime, U.S. private equity firm Carlyle Group says it had ended its interest in buying Metro Bank. What's upsetting Carlyle?
Goodness me, we don't know on the record. There's lots of speculation, and it really is because Metro Bank was just in so much trouble. I believe for the first half of this year, they reported losses of over £100 million. They've got weak loans growth. In 2019, there was a massive accounting error, a big black hole in their system, which is still subject to investigation. And unlike some of the larger banks, the established banks like NatWest and Lloyds, Metro really do rely on a high street presence. And we know in the UK, high street banks have really been pulling back and it's more digital. That's not the same for Metro. That's bricks and mortar. And of course, that costs a lot of money. I think Carlyle took market by complete surprise when earlier this month they said they had interest in Metro Bank. Their shares were up 20%, subject to this announcement this morning that they're pulling back. Shares have declined by almost the same amount for Metro Bank. So unfortunately, their woes continue, but it has sparked some suggestions that perhaps US private equity firms are interested in small to medium-sized banks here in the UK. But of course, that does come with a lot of regulations, a lot of IT infrastructure investment, but it's not the first one to happen. Cooperative Bank also showed some interest in TSB earlier this year.
All right, thank you very much, Juliana. Well, I guess you still have more updates to give us much later in the day. And it's now time to talk crypto. Laddie, did I hear you say it's a bloodbath?
Oh, yes, it's still a bloodbath. It's not been a really good week for the crypto market. And, you know, major markets in the world, we've seen the oil market also, you know, have its pullback. And the crypto market is not left out here, you know, with riskier assets. So Friday, the color is red. Pitch red all through, and we have just stable coins and a couple of altcoins actually in the green this morning. The market cap retreated from the $3 trillion market hit last week. It's down 4% this morning. 24-hour volume in the total crypto market, we have $145.20 billion. And we see Bitcoin dominance inching down there at 42.7%. Price of Bitcoin broke that 59K support, now at $56,000, down 5% this morning. A huge pullback there. Some analysts believe it's going to hit that 53K before we see the latest bottom there. And we have 24-hour volume, $41.95 billion traded in Bitcoin this morning. Still from that, from the sell-offs we see in the market. Ethereum there, trying to inch below that 4K level there. It's at $4,073. Let's see if the 4,000 level can actually hold this weekend. It's down 4.14%. Volume traded, $22.70 billion traded in Ethereum this morning. Let's bring in Michael Enaji now, digital market analyst, to bring us up to speed. Great to have you, Michael. Happy Red Friday.
Happy weekend. Thanks for having me on, Laddie.
Yeah, Michael. So it's all about regulation now in the crypto space. We've had the regulatory onslaught on in the U.S. Right now with the passage of the new infrastructure bill. Tell us about this bill and how it impacts the crypto market.
Yeah, so the bill, what it does, it adds a lack of clarity into the crypto space for mainly people like miners, people who run their own nodes, people who facilitate transactions on any blockchain who aren't necessarily like a broker. Like everyone knows, a broker is basically someone who facilitates financial transactions. But what Congress is trying to do here is they're trying to paint broker as anyone who runs a node, anyone who maintains a mining farm. Very broad, overarching implications. So basically, what they're trying to do is, let's say, I'm a Mecca in Onitsha, and I'm trying to send $20,000 to, let's say, someone in the U.S. Now I have to declare the entire thing. The U.S. You're going to have up to, I think it's 15 days for you to declare the transaction. If it's over 10K, you also have to report your social insurance number. Basically, it's very stringent financial reporting that only needs to be done at the point of sale. Like, what I mean by that is the exchanges. So this regulation could have been, more detailed, and the brokers could have mainly been the exchanges rather than the people who are facilitating the network. It's almost like America can't stop Bitcoin. So rather than, they know they can't stop it. So instead they choose to make it very cumbersome to make transactions. So the outcome of this is either you're going to see new amendments coming out and them clarifying this broker rule, or you're going to see two completely different cryptos. You're going to see one crypto in the East that requires no KYC to do a transaction. I can send whatever amount to anyone in the world without needing anyone's, without needing any censorship, meeting any censorship in the way. Or what the U.S. is trying to do, where you basically have to do KYC and all these other things for just sending crypto from one peer-to-peer even. So that does defeat a lot of the merits of crypto. It's almost like taking 3 steps backwards. And it's, I think it has a lot to do with the move downward this week. So, because that officially became law. It doesn't get enacted until, I believe, it's later to 2023, basically 2024. It's when it begins. So a lot of the market participants do have time to, enact these new changes. But that does add, regulatory overhead, to everybody who has exposure to the ecosystem. So, it makes a lot of sense why, we're going down this much this week when there's, something like this to follow the backdrop.
Exactly. But, Michael, with the decentralized nature of cryptocurrencies, we have some, privacy tokens. How easy is this enforcement?
So the enforcement is fairly easy in terms of if you want to send a transaction, because right now there's only a handful of places that you can get liquidity to exit. So for instance, let's say I wanted to send $100,000 worth of crypto to somebody in the US. There's only a handful of places, unless they wanted to do peer-to-peer, that they could exchange it. You can, of course, do peer-to-peer exchange and never hit an intermediary. You never have to report anything. But a vast majority of market participants choose to report and choose to use exchanges that are regulated. So it's fairly easy to have these reporting requirements. For instance, when you send something to someone on an exchange and it's an exchange wallet, there's going to be KYC on that part. And you can't just send money to someone. For instance, you can use now Binance to send anything to anyone who has a Binance account. But in the future, the U.S. wants basically for anyone in the U.S. to receive anything, the person sending it to them has to be KYC'd.
Okay. All right, Michael, we'll see how the law is actually enforced and how it impacts the market going forward. But let's hope there's some bounce or recovery by next week or this weekend. All right, Michael, thank you so much. All right, back to the market now. We see top also market cap. No one is spared there. We see Solana there with the biggest loss there. It's down 7%, $196. And we see BNB there with a little pullback there, down 4%. XRP looking to go below the $1 mark there, down 5% this morning. Let's look at my coin to watch there. PSI also had a pullback. Last time it was trading around $240 per coin, but it's $208. So the developers are looking to add some new effects to the PSI network with a ramp-up sale there, and actually adding what they call the launch pad for tokens on the PSI network. So this could actually get a boost going forward. When we say top 5 gainers, we say VLX, they're 13% up. So even though it's a bloodbath there, we still have some tokens actually holding up there with Mana there, one of the metaverse tokens, $3.95. It's had an incredible run in October. It's up 10%. And we see Sandbox there up 6%. And the top losers there, we see Audio there, 19% down. The bloodbath there with KuCoin shares not spared, KDA and Harmony Network down 10.17%. So, Chimi, it's a red Friday. It's not looking good for traders right now.
Well, the market doesn't sleep, so hopefully, perhaps, you never can tell before this Friday ends, things might probably change. But going into the weekend, I actually would want to play the gameplay. You talked about that yesterday.
Play to earn. Yeah, play to earn tokens.
Play to what?
Play to earn.
Oh,
so
okay.
you play a computer game, you can make some money while you're playing.
And that's on the metaverse?
Yeah, for metaverse tokens. You know, there are a couple of them out there with Sandbox and
that's my
all
own
of those
coin
tokens,
to watch.
Right. All right, so I guess Jimmy's going to be playing a lot of games going forward.
Absolutely. All right, thank you, Ladi. And that's a wrap on the program for today and, of course, for the week. Thank you so much for being part of it. And do remember to join us later this afternoon for Business Incorporated. That's by 1:30. I'm Chimeze Obi Iwagu.